Hello and welcome to this Forex Preview at XM.com. I'm Maria Bajardis, and joining me is Senior Investment Analyst Marios Hadjikyriacos. We'll be discussing upcoming U.S. data and the potential reaction in the dollar. So Marios, last week's U.S. employment report showed that the U.S. economy is not doing as well as most investors thought, although other economic indicators suggest the American economy is doing just fine overall. We'll get CPI inflation on Wednesday and retail sales on Friday. What should we expect from this data, and what's the story around the Fed?
Hello, Maria. Well, I think you hit it right on the head. So we got that shockingly disappointing jobs report, and it really vindicated the Fed's own view, right? The Fed has been saying all along that there's still a long way to go until the labor market recovers fully. Now, here's the thing. I don't think one bad jobs report is enough to derail the entire narrative that the Fed is going to start talking about tapering later this year, but I think it's enough to delay it. So until now, we had some speculation that the Fed might start discussing tapering maybe as early as at the June meeting, maybe in July. But after the jobs report, I think that's off the table. Right now, it looks like it's going to be August, maybe September, or maybe even a little bit later. Now, what does this imply for the dollar? It implies that the coming months may be a difficult period because we're going to have accelerating inflation, but at the same time, that's not going to make the central bank move in a more hawkish direction, let's say. Now, turning to the upcoming data, we're going to get inflation on Wednesday. That's expected to accelerate pretty substantially. But here's the thing. Much of this acceleration in inflation, it comes down to supply side factors. So commodity prices are rising, supply chains have been disrupted, and we also have some base effects distorting the actual number after the plunge last year. So what I'm trying to say is this isn't the healthy demand-driven inflation that the Fed wants to see. Now, as far as retail sales are concerned, they're expected to rise a little bit further, but after the stunningly strong print that we had last month, I think that the chances of a disappointment are also relatively high.
Okay, in the bigger picture, what's the outlook for the dollar?
Well, here's the thing. The ultimate trajectory, I think, for the dollar is still higher, but with the Fed still months away from discussing tapering even, it's hard to see the dollar strengthening anytime soon. So what I'm really trying to say is maybe the turning point for the dollar will be late August, maybe it's going to be September, but until then, the picture looks relatively grim for the dollar. Now, the dollar may struggle, but the question is, against what is it going to struggle? The European economy, for example, is still in bad shape. Japan's vaccine rollout has been excruciatingly slow. So I think that instead the dollar might lose some ground against the British pound and the Canadian dollar. Both the British and the Canadian economies are doing relatively well, and those central banks are starting to take baby steps towards normalizing monetary policy. So trying to say is that cable and dollar loonie, those pairs might be better proxies for any short-term dollar weakness than euro dollar or dollar yen.
Marios, thanks so much. And thanks for joining us at XM.com.